Hello, friends. This is Apiwe Madingelele. We're back. So I had done a couple of videos last week. That was last week. Yes, I've done 3 videos, and all those videos were looking at the effective ways of getting a job. The effective ways of getting a job that you've applied for, you're still planning to apply for. We looked at that in 3 parts. The first part was designing a CV. How do you design a CV? And then the second part was actually on preparations for interviews. And then the third part was on assessments. What is the purpose of assessments? How to prepare for assessments, and what's the contents of all the assessments. So you can go through my YouTube, Apio Makengelele, and look for those videos, or go through my TikTok account. You're gonna see all those videos. If you are someone who's really clueless in terms of what to prepare for, when they are going to go to an interview or assessment, or still planning to submit their CV, go to those videos. They're going to help you a lot in ensuring that you submit a proper CV for that opportunity that you're eyeing. So today we're going to look at salary negotiation. So you have got the job already now. They've sent you an offer, and they're telling you. So normally when they send you an offer, they would give you a mock pay slip, and on that mock pay slip, there's going to be a lot of details that you really need to understand. And I know that many people say when you receive an offer, you must not hit too high, or maybe when you are asked your salary expectation, you must not hit too high or hit too low. You must sit in the middle. And many people are asking, how do I know if I'm really hitting in the middle? So I'm going to try to answer that question now. I'm going to help you as you trying to think of a proper range, for the expected salary from your new or potential employer. So they send you that mock payslip, and that mock payslip is going to have a couple of details. At the top, there's going to be what we call CTC, cost to company. So there's going to be a total cost to company. The total cost to company is the amount that the business is planning to spend on you. All the costs that are related, to you as their employee, they're gonna be included in that. So that's going to be, the trainings, stuff like your skills levy, and all the benefits that you get in the business. It includes your medical aid, your tax deductions, your UIF, and just everything. It's just, pension fund, everything's gonna be there. And in total, we're gonna call that cost to company. And some other businesses, they're gonna include your bonus potential. They will include that percentage there. If you are eligible for a 10% or 15, 20% bonus, then they're gonna put that amount there, and then that will give you the total cost to company. Some other businesses won't include, bonus. You will only see that as a separate calculation. Yes. So now you've got this pay slip. And I think it's very important that you understand your pay slip. You understand the amounts that come through your pay slip. You understand your pension fund. You understand your tax deduction. That's your pay as you earn, your UIF, and you understand the other, deductions that you're going to see in that payslip. There are deductions that are voluntary. There are deductions that are compulsory, like your UIF. UIF is compulsory. You have to pay, UIF, and also tax. I would say in South Africa, tax is compulsory. If you are above a certain, pay range, then you are required to pay tax. I think if I'm not sure if I'm going to be correct on this one. I think it's from 6,000. If you earn 6,000 or less, then you are not required to pay tax. But if you are earning more than that, then SARS wants you to pay tax, and UIF is charged on everyone who works. If you're an employee, you need to pay UIF. It's called Unemployment Insurance Fund. So you get some money when you're unemployed. You can claim from the UIF. So it helps a lot in those cases. Yes. Then you have those that we can say they are deductions that are related to benefits. And some are voluntary, some are compulsory. You have pension fund. Companies, they make it compulsory that you contribute into pension fund, and you also contribute into medical aid, especially private companies. I know that when it comes to medical aid and pension fund, you have to contribute whether you like it or not. So you need to know those details. You need to know what percentage am I actually paying into pension fund, because you're gonna negotiate around that. If you're coming from an employer that contributed, let's say 3% into your pension fund, and you gave in maybe normally the range is from 7% until 15%. So if you were 12%, you were contributing 12%, then you're gonna add that 3% from the employer. That's gonna be 15%. And then the new employer is simple not contributing anything. Then you need to negotiate on that one, because you're gonna be losing some money going into your pension fund. So understanding your pension fund and understanding the percentage that you pay into a percentage is very important. Medical aid. Some companies, they incentivize your medical aid and just pay a certain 50% maybe, or even less, whatever. Some companies, they pay the whole portion of medical aid expense. So you obviously need to understand, is the company that I'm working for paying for all my medical aid expenses, or am I paying from my side, and all those kind of things, because in the end, that's going to have an impact in your net pay. So you need to understand those things so that you negotiate. If they say, for instance, you're going to pay 1,000, you're going to pay 1,000 of your medical expenses, and your prior employer used to pay something that's they used to pay maybe 50% or even the whole expense, then you must negotiate so that end of the day, your net pay, which is the money that comes to you, is not really affected by that. That's another thing that you really need to look at. And there are stuff that you really cannot negotiate, like tax. You cannot negotiate tax. Tax is tax. It's not determined by your employer. It's determined by SARS and your UIF. That you can't negotiate that. You have to pay it. It's a non-negotiable part or element of your pay slip. So obviously you can see that the main important thing here is really understanding your payslip, so that when you go to negotiate with your potential employer, you come with valid reasons. I mean, like if you just come and say, I want 20,000 increase, it just doesn't make sense. Why do you want that 20,000 increase? You must have valid reasons, that you're gonna give to your employer. Normally, they would ask for your payslip even before, the whole interview, whatever process. They know how much you're earning, and they know the benefits and everything. They should have their own benefits, to counter whatever that you were getting from your prior or previous employee. It's a bit. So yeah. So that's very, very fundamental. And then the other element that companies are going to ask, they even ask that, like when you're still applying, they want to know if you have received an increase from your employer, your prior or previous employer. If yes, then you need to be reasonable on what you're asking for. You can't ask for a 20% increase when you have had an increase already. It's just unfair, and it would sound as if you just leaving because you're looking for money and less about the opportunity. So you need to be reasonable in all that you are going to negotiate, the percentage that you're going to ask for from your potential employer. So for me, if the benefits are actually the same from both employers, and we have not received the increase from the previous employer, then I would say that ask for something around 7%, up to 10%. That range is quite, because normally companies, they would increase your salary by 7% up to 10%, not unless you perform quite well and then they push it to 12% or even higher. But the perfect range, it would be 7% to 10%, unless there are these changes in terms of benefits. Then the percentage might be a bit higher because of those, like medical aid you are getting. Your previous employer was paying all your medical aid expense, and then you're obviously going to ask for a high percentage because of that, to cover for that shortfall on your net pay. So, and also pension fund and all those things. So you base whatever tweak that you're going to make on your increase percentage on the basis of whatever that's happening in your benefits, and also the increase for the year. If they're all the same, then just ask for 7% or 7 to 10%. That's a perfect range. Don't ask for 20% for no reason. If you are relocating from Eastern Cape to Joburg, Eastern Cape to Cape Town or whatever, then you can push maybe the percentage maybe up to your 15% or whatever, because of the cost of living and relocation costs and all those kind of things. Then you need to also consider those things. So I would say to you, as you're negotiating, don't just come up with any percentage. Think, read through your payslip, understand all the benefits, and after understanding that benefits, those benefits, then you can actually come up with a percentage. And I know companies, what they do, they look at how much you're earning, and they always want to make a saving. So you need to challenge them. I know many of us, we really don't spend time on this, but it's very important that you challenge the people that you're going to work for. Otherwise you're going to be frustrated with a small salary. At the same time, you don't want to punch too high, in case you'd end up losing the opportunity. You always have to keep and ensure that all the reasons for the percentage increase you want are valid. You have gone through the payslip, you've got your current payslip, and you have also gone through your expected salary on your mock payslip. So I think those things will really, really help you. And yeah, all the best if you are looking for any opportunity, or you have applied, or you've got an offer already. All the best. Please make use of all these tips that I've given you. Thanks.